Hi, Connected Yoga Teachers. Before I get into today's episode, I want to take a moment to address the United States Supreme Court decision to overturn Roe v. Wade on June the 24th, which stripped away the right to have a safe and legal abortion. Restricting access to comprehensive reproductive care, including abortion, threatens the health and independence of all Americans. And as a Canadian podcaster, I also think that we really need to be looking at this no matter where we live in the world, because this decision could also lead to the loss of other rights in various places around the world as well, but especially in the US right now. If you want to learn more about what you can do to help, go to podvoices.help. And I encourage you, please speak up, take care, and spread the word. I also want to thank the many podcasters who are taking the time to share this message. And if you have a podcast or if you listen to other podcasts, I will include a link in our show notes that is all about the information for this movement to speak up on podcasts. And all of our links for today are over at theconnectedyogateacher.com/280. Alrighty, let's get into today's episode, which has been brought to you by OfferingTree. Did you sign up to be a yoga teacher so you could spend all of your time tracking down payments and registrations while making sure all of your waiver forms are filled out? My guess is no. Most yoga teachers I know do not find joy in these tasks, but they have to be done. And if you would like to focus more on sharing the benefits of yoga and less on the payment and registration side of things, make sure to check out OfferingTree. This is a software made for yoga teachers. I love it, I use it, and I cannot say enough about this company. I also have a discount code for you because you are a podcast listener. You can find that over at offeringtree.com/Shannon. This podcast is also brought to you by Pelvic Health Professionals. If you would like to learn from the world's leading pelvic health experts about topics that your yoga students are dealing with and often not talking about, check us out over at pelvichealthprofessionals.com. We had a really great call last month with Michelle Lyons, and I shared snippets of that on last week's podcast episode. That was 279. If you want to go back and have a listen, it's there for you. Our talk was all about bowel health and yoga and how yoga really impacts our digestion and our bowel health. And in that episode, I want to tell you there is a special gift, 1 month of free access for all podcast listeners. The details are over in that episode. So go have a listen if you didn't last week. So that's kind of our housekeeping as we dive in. And so let's get right into it. Hello and welcome to the Connected Yoga Teacher podcast. I'm your host, Shannon Crow. I use she, her pronouns, and this podcast is being recorded on Anishinaabeg, Odawa, and Mississauga land, which was named the Bruce Peninsula in Ontario, Canada, as it became settled land. And I've been learning more about how yoga and the land I live on were both taken through colonization. And as part of this, I really want to go beyond just acknowledging the land that I'm on here on the podcast. And I had this light bulb moment this week, and I thought maybe some of you would like to join me as I learn. This is a very informal book club. And quite honestly, it's a podcast club. Because you're here listening, you listen to podcasts, there might be audiobooks as well. But I thought, wouldn't it be cool if we can learn together? I will share with you the things that I'm learning from right now with regards to colonization. Maybe that's around land or yoga and cultural appropriation. These are topics that we've been talking about here on the podcast. And I just want to dive in a little bit deeper. And there's some really amazing resources. Like this week, I'm listening to a podcast that I found on Audible. It's over on audible.ca. So let me know if you're an American listener and you can't find it. It's free for those who have Audible here in Canada. I know that. I'll put a link in the show notes. It's called 7 Truths. So in this podcast series, Tanya Talega is the gifted storyteller who weaves together stories and experiences from Turtle Island residents, along with each of the 7 truths: love, bravery, humility, wisdom, honesty, respect, and truth. So I'll make sure to link to that in our show notes. And let me know if you decide to listen. Or maybe you have something that you'd like me to listen to next. I am open to any and all suggestions with regards to learning more. And speaking of learning more, you might not know that I'm also a mom of 3. I do a lot of learning in that part of my life. I'm a yoga teacher. I've been a yoga teacher for, since 2006. Podcaster and also founder of Pelvic Health Professionals. And this podcast was created for you so that each and every week you are connected to the information and inspiration that is going to support you as you build your yoga business. Oh my goodness, I wish that episodes like today's episode were available to me while I was in yoga teacher training, or maybe even before I began yoga teacher training. Anyone who has ever run a small business, who has ever thought about becoming an entrepreneur, anyone who is teaching yoga now, please share this episode with them, because as yoga business owners, how do we pay ourselves? How do we pay ourselves a consistent salary? That's the biggest question. Is it possible to make a profit and have a sustainable yoga business? I believe it is, and I'm so excited that our guest today also does. And I know that this is a struggle for yoga teachers. I hear from yoga teachers who feel conflicted about making money or making profit because they want to show up and help and serve. But we can do both. We can make money in order to be able to give more in our communities. And today we're going to dig into that uncomfortable time where we think, should I put my own needs first? Yeah, this is where we're going to dig in and learn how you can make a profit right away in your yoga business. Shannon Simmons is here to talk about how to organize your finances and make sure that you can pay yourself a consistent salary, build solid financial systems, worry a lot less about paying your bills, and create that sustainable business. She's the founder and CEO of Fit for Profit, and her goal is to remove the stress that wellness business owners often feel around finances by helping them implement simple systems around money management. That's the thing that I really love about today's interview, is that Shannon specializes in working with wellness business owners. So she understands yoga teachers, movement professionals, anyone who works in the health and wellness field. Now, this is a live that we did inside of the Connected Yoga Teacher Facebook group last year. And I know that many of our podcast listeners love it when we take those interviews and make them ready to listen while you're on the go, out doing things in the world. So you don't have to sit and watch a video or play it on YouTube or play it in the Facebook group. And while we're talking about the audio here, I want to give a huge shout out to Suzanne, who put so much extra love and effort into our audio. And someone else noticed this. So Johannes from Langley, BC, I hope I'm saying your name properly, sent in a review noting our audio quality, which is all about Suzanne. So I want to share that with you, that review with you, and give a shout out to Suzanne here. So Johannes wrote, "Hi Shannon, in episode 272, you asked for us to review your podcast, and I thought I had already done so, but I hadn't. I love your voice. It's so calm and easy to listen to. Your recording is of high quality, and I really appreciate that, especially because I usually listen while I'm driving. Your topics are always thought-provoking and useful. I often feel revitalized and eager to get to work after listening. Thanks for keeping me in the loop of what's happening in the yoga world, from Langley, BC, Canada." Oh my goodness. Thank you so much for sending this review. I know that it takes some time and effort to go onto iTunes, to leave a review. I love that you thought that you already had done that. I've done that before with other podcasts, and that you were like, "Oh, I didn't. I'm going to do that." I hope everyone else listening does the same. It is an amazing gift to any podcaster when you leave a review. It lets others know about our podcast. It really gives us feedback. Thank you so much. And Johannes, I love how you said that you feel revitalized and eager to get to work after listening. I bet that's the way you're going to feel after listening to today's episode, because I sure did. And I've listened to this episode a couple of times. So I first listened live, when I was interviewing Shannon, and I got really motivated then. And now when I've gone back to listen to get it ready here for you, I got motivated all over again, and I took another step with my finances. So this is what makes me so excited to share episodes like this with you, because I know that yoga teachers can make a profit, and I want yoga teachers to be making profit out in this world, because I know that yoga teachers do amazing things when they make money. They spend it in really conscious ways. So yes, it's possible to make money as a yoga teacher, and Shannon Simmons is going to tell you one of the main secrets to making profit on day one of your business. And if today is not day one of your business, don't worry. I didn't learn this on day one of my business. Let's dive right in today and learn how to do this as of today, how to make money and earn profit and get paid as a yoga teacher. Hi, Shannon.
Hello, Shannon.
I love it. Hello to everyone who's here for the replay as well. I'd love to know in the comments where you're tuning in from. I am super excited that we get to chat today. Shannon, thank you for being here today. Welcome to the Connected Yoga Teacher Podcast Live.
Thank you so much, Shannon, for having me. Super excited to be here.
Tell our listeners, what is the work that you do and who do you do it for?
Yeah, so I am a profit coach / also known as recovering accountant. And so I started definitely doing accounting and bookkeeping traditionally, the way that you probably think of accounting and bookkeeping. And about 7 years ago, I found Profit First, which radically changed my business. And then I now help people in the fitness world specifically to implement this system to manage their cash and increase their profit in their business.
This is really exciting. I have read Profit First. I'm pretty sure I've also listened to the audiobook. And I have talked to my bookkeeper about it, and I talked to my friend, my biz bestie, Amanda McKinney, who loves Profit First and actually just interviewed Mike Michalowicz on her podcast. And yet I struggled to implement it. So for our listeners who are here, what is Profit First?
Yeah. So I like to say it a couple different ways so that hopefully one of them catches somebody and you understand it, right? So it's really the way you manage cash in your business. So it doesn't replace the accounting and bookkeeping. That still needs done, right? So that's why we do both. But it is the way that you manage the cash. So a lot of people have heard of Dave Ramsey and his envelope system. And I like to say Profit First is the modernized envelope system for businesses instead of personal. Because Dave at Ramsey and the envelope system really focuses on personal finances. It's great. Profit First can be used personally as well. But nobody uses cash, and I don't want to be carrying around a lot of envelopes, and it's just not the way we do business. So what Profit First does is use bank accounts instead of envelopes. And basically, we're giving every single dollar that comes into your business as revenue a purpose before we spend it. So we set aside a little bit of your money as profit so that it doesn't get sucked up by our natural human. It's completely natural that when you get money, you want to spend all of your money. And so we put these 5 basic accounts in place in your business so that you can't quite spend all of it quite so easily. And then what happens is it's kind of miraculous, but it's all the psychology and mindset in our head. At the end of a week or month or quarter, we have profit left instead of wondering where all our revenue went. So it's really not a difficult system, but it is. We do find people like you who struggle to implement it. So there are definitely conversations to be had there too.
Well, I understand the theory behind it, and I really love that, like setting money aside so that we all have some type of profit in our business. And the bank account thing is what catches me. So I'm in Canada. I
Okay.
feel like it's harder in Canada to get multiple bank accounts for some reason. I don't know if you've heard that.
Yeah.
Yeah.
I mean, I don't know if it's harder in Canada. It doesn't, I don't think it really matters where you are. It depends on the bank.
Okay.
So there are banks in Canada, I know, that work with it and don't charge a lot of fees to have all the accounts. There are banks in the US, though, that do charge fees to have all the accounts. So it's really a matter of finding the best bank that's not going to charge you fees, because that would go against the whole system to pay fees to have it.
Right. Do you have a list of banks that you suggest to people?
Yeah. So actually, if you go to fitforprofit.com/resources, there's a list of banks there. They are all US based banks, but I will get the names of some Canadian based banks as well and add them to it. Maybe before the podcast actually comes out.
Perfect. That's amazing. Let's dig into how we can pay ourselves. So I love how you talked about the envelope system and that profit first is different. I think what happens a lot of the time to yoga teachers and any entrepreneurs really is that we end up saying, okay, I'm going to take all the money I made, pay all of my bills. And like you said, it seems like then there's nothing left over. So do you want to explain how profit first is different in that way?
Yeah. So, I mean, you're exactly right. What happens is we're operating out of this one big checking account, and all of our revenue comes in here. And the human psychology that I talked about, there's actually a law called Parkinson's law, and it applies to every resource that we have. But the more of it that we have, the more of it we use. So I like to say, equate it to like time. We all fall into this, at least I do. If somebody gives me 8 weeks to complete a project, you best believe I'm going to be waiting like till week 7 to start the project. And then I'm like in this massive panic mode because, oh, like I should have been doing research for a week and I should have been planning this out, right? But I still get it done in that 1 week. So if they would have just given me 8 days instead of 8 weeks, I could have gotten it done. And that's the whole premise, that when we have 8 weeks, we take 8 weeks. So when we come to money, if you have $10,000 in your bank account, you will spend $10,000. But if we said instead, say, let's take this like one tiny percent, literally we start with 1% in your profit account, and we operate your business now off of $9,900 instead of $10,000, you'll find a way to get it done. Like there's $100 that can be set aside. And obviously when we're talking about your actual pay, we want it to be more than 1%. So we might start with 1% and we just build up to the point where you're actually paying yourself a reasonable wage from your business, instead of like, people assume that all of their operating expenses are necessary and required to run a business. And what we find most of the time is there are things that you can either get better value from or pay less for, or maybe aren't really as important as you envision them to be or you think they are, but you're emotionally connected to your expenses because you've made an agreement with somebody that I'm going to subscribe to your service for a year or whatever it is, and you're just emotionally attached. Or maybe I fall into this one. I know there's a better service out there, but I don't really have the time to research and make the changes. And so when we can help people put that into dollars that they can now pay themselves, I mean, I'm the same way. I'm like, oh, but hold on a second. That's $500 that I could have over the course of a year. It might be worth it to go through the pain of switching that. So there's lots of different ways to look at it, but that's the idea. Like when you have a lot of money, you spend a lot of money. And when you don't have quite so much money, you make it work off just a little.
This is so true. I used to work as a farmer and I got paid once a year. So I know what it was like to think, okay, how's this going to work for the rest of the year? And I definitely have some habits left over from that. I definitely pay down like all of my debt first. And this is what draws me to profit first. And this is why I sit on the fence all the time of like, I know I could do this. I know I could implement this. So if we put 1% to profit, so the money comes in, and I know it's twice a month, you do your calculations. 1% goes to profit. What are the other accounts then?
Yeah, absolutely. Glad you asked. So there's 5 basic accounts, right? The first one you need is your income account because you need a place for all of that money to come into that's separate from where you're going to spend your money from. So we have one account that's completely dedicated to your income account or your income. The second account that you need is your profit account. We've already talked about that. So we know how much we're going to put in there. The third account is your owner's pay account. And this is where your salary is going to come from on a regular basis. I believe that you are your very best employee. Even if you're your only employee, you're definitely your very best. But even if you have a team, you're still your best employee. So you need to pay yourself. We want to avoid that burnout that we see a lot of times from any business owner, not just solopreneurs, but any business owner. And then the fourth account you're going to have is your tax account, because I've been in the position actually where I couldn't pay my tax bill, and I want to help everybody avoid that situation if at all possible. It is not fun. And the more profitable you are, the more of a tax bill you're going to have. So we just want to make sure that you're set up to take care of that, and we don't leave you with all this profit and then a big tax bill that you can't pay. So your fourth account is your tax bill or your tax account. And then the fifth account is your operating expense account. And that's where you pay everything else from. So everything that you're currently paying right now, basically, comes from your operating expense account. So your rent, any dues and subscriptions, insurance, payroll, all of that comes from your operating expense account.
So just to clarify for any of our listeners, your owner's pay, you paying yourself as, the owner of your business. You might be the only person working in your business right now. That is separate from your profit. Can you explain that?
Yes, absolutely. So, you, like I said, you are your own best employee. So you need to be paying yourself as if you were an employee. And you wouldn't wait till the end of every 3 months. Shannon, I can't believe that you only got paid once a year as a farmer. That's amazing and crazy. So I guess there are a few jobs out there where you only get paid once a year, but they're few and far between, because the reality is, personally, we have bills to pay way more frequently than even once a month. And so we want to pay you on a regular basis, whatever that is. It can be weekly, it can be every other week, whatever, within a month, right? Like definitely on a monthly basis, you want to pay yourself. And then the profit is, I like to say, it's your bonus. It's your quarterly bonus. Like, think about if you had a big corporate job and they gave a quarterly bonus. That's your profit. It's to do something fun. So your owner's pay pays your regular bills, your personal rent, housing, whatever that is, your transportation, your food, those things that you have to have every day. And your profit, it's the bonus on top. It's the vacations. It's the, down payments on houses and cars. And it's the celebration money is really what we like to talk about with profit.
That's amazing. There's a podcast episode that we did with Steph Crowder on minimum viable income. So that's a great one to go along with this of what you absolutely need to make to live. That's where you would calculate that owner's pay or owner's draw. What about, because you work in the fitness industry, I'm sure you work with a lot of yoga teachers. Do you hear the same thing that I often hear is, this shouldn't be all about profit. I want to help people. It shouldn't be about me making profit. What would you say to that?
Yeah. It's totally not all about you making profit. You absolutely should be helping people. But the only way, it's a double-edged sword both ways. The only way to help people is to be profitable. And the only way that you can truly be profitable is if you're really helping people. Like, people aren't going to keep paying you if you're not helping them. So obviously you're helping them. But you're not going to be able to continue to help people as long as you want to do it if you're not profitable. And if you're not even like you said, paying yourself that minimum viable wage. Like, if you're not, if you only have $100 of profit every quarter, I still consider you profitable and very successful, but you've got to be paying yourself that minimum viable wage, or else you're out doing something else. And that's taking away from the number of people that you can help. So they really go hand in hand. You have to do both, in my opinion.
This is so good. I'm so glad that you said that pretty soon you start looking at, oh, I could, like here in Canada, it's Tim Hortons. I know you have them somewhere there, but like, or Starbucks, like I could go and work at my local coffee shop and be making more money. We don't want to get into that position unless our dream is to work at the local coffee shop. Go for it then.
Yeah.
But if your dream is to be teaching yoga and you want to do that full time or part time, we really have to be making that money. Are there some tips that you've learned along the way that really help fitness instructors to implement this system to pay themselves?
For sure. And can I just backtrack really and say that if that's your dream to work at Tim Hortons or Starbucks, go for it. Most of the time, your clients, like I said, they want you to be profitable because they want you to be around and be open, and they don't want you to burn out and all of a sudden close down. And so one of the biggest tips that we normally have to do with people when we implement Profit First is actually raise rates, because most of the time people aren't charging enough for their memberships or classes or however you're doing it. And people really, yoga teachers, business owners, really resist that, right? They're like, I'm going to lose everybody. Most of your clients, if you tell them, like most of your clients think that you're making a lot of money. And when you tell them that you're not, they want you to be making a lot of money. Like they really value what you're doing. And so if they knew what you really were making, they would have absolutely no problem paying you another $10 or $20 a month. It's usually not a lot that you need to increase your rates. But that's the thing. Like they want you to be successful. And so, like I said, sometimes it does mean raising rates. Usually we get very little pushback to that from clients and members and students of yoga studios. So that's tip number one. Like you may need to raise your rates, and don't freak out about that.
Do you have a formula for like, this is how often to raise your rates?
I like to say it should be done on an annual basis. Pretty much all of your operating expenses are going to go up on an annual basis. So if you don't keep up with that inflation, right? If you don't keep up with that, it's really hard. I find it's a lot harder to raise your rates $20, $30, $40 a month than it is $5. So if you raise your rates $5 every single year, at the end of 5 years, you've raised your rates $25, but nobody's noticed because it was only a Tim Hortons cup of coffee once, every year or every month. But when you start to talk about, oh my gosh, like that's a tank of gas, or when you can equate it to something bigger, then members start to go like, oh, that's a lot of money. I don't know if I want to do it. So I like to do small, more frequent increases rather than big ones every couple years instead.
That's so good. That's so helpful. Sorry. And then you were going to tell us some other tips. So first, we look at raise your rates. Like I would say right now, connected yoga teachers, put it on your calendar right now. Like the day that you're going to raise your rate, whatever day you choose in the year, it doesn't matter. And you don't have to send a big explanation to people. You can tell them. I don't know if you have tips about that, Shannon, but the price of gas goes up and nobody's sending me an email to explain why.
Exactly. Right. I mean, keep it simple. You don't have to explain. Like I said, especially when you do it at a small dollar amount, they won't ask questions. And be available to answer questions. Say, if you have any questions or concerns, let me know. Nobody's going to do it. The other thing I always do is like set your date on your calendar, like Shannon said. And then you can choose if that's the date that you're going to send the letter or if that's the date you're actually going to increase rates. But 30 days on either side of that is when you send the letter, like 30 days before. Give them some time, give them some notice. Most of the time they'll get the letter, they'll be like, oh, maybe I'm going to talk to her about that. Then they forget, then the rates go up and they don't care.
Right.
And so it's a non-issue. We make it way more of an issue than we need to. So that's really the tip. Keep it simple as far as rates.
Okay. So then once we do that, we raise our rates. What other tips help?
Yeah, so I would say that's probably not really the first tip. I just kind of fell into that. First, go set up one bank account. So I said 5 at the beginning, but if you have any resistance to 5, you don't have to do 5. Just start with 1. That's the very basic process to get started. And every time you get a deposit, which may be every day, you take 1% and put it into this new account, and that's your profit account. So it really starts establishing the habit and the mindset. It's really just like fitness, right? Like we really don't care how many times or how many reps somebody can do in fitness or what poses they can do in yoga. We just want to get them coming 3 times a week or whatever it is so that they establish the habit of doing it. Then we can start to talk about how to improve that habit once they've actually got the habit. So the same thing is true with your money. We want to just establish the habit of putting money into that profit account. So just start there. And then, I don't know, a month from now, 3 months from now, you'll be like, oh, this is kind of nice. Like I've got some money in this account. What should I be doing with that? And then you can come back and read the book. You can listen to this episode again, whatever it is, and you can build on it from there. But that's always the first step. If there's any resistance to 5, just start with 1. And then where I was going to go, the second step is get a bank statement and look at every expense that's on there and decide, is every single expense necessary to your business? And is it providing value to your business? So those 2 questions, you can usually find an expense or 2 to reduce. And that's where you can not even raise your rates and still have profit to put in your profit account. And then you can raise your rates. After you've evaluated your expenses and you're just make sure you're operating efficiently, right? And then you can raise your rates. And then you know that you already have the system in place. You already have your profit account set up. So what's going to happen with that additional income is it's actually going to get set aside for profit. If you just raise your rates and you don't have the profit account, we're right back to Parkinson's law. You've got more money in your income account and you'll just find an expense to increase. So you have to have the account first.
So true. This is so true. The way we work when we have a deadline that's really far away or a big chunk of cash, we will end up spending it. So I love this evaluate expenses. What I do each Friday is my finance day. And I have one question, my CEO report that asks me, is there an expense I can get rid of? And sometimes it rolls over. It's just in my brain like, oh yeah, I signed up for that thing and I'm not using it and I need to, unsubscribe or do whatever. And it might roll over like week after week, but then it starts to really wear on me like, oh my gosh, I'm not using that thing. And I really appreciate that this is also where profit exists in our business. Yeah.
Yeah, for sure. Absolutely.
I want to clarify. Oh, sorry.
I'm really curious. Do you have anybody on your team that is in tune with the finances of your business?
I have a bookkeeper. Kelly Christian does my bookkeeping now. Yeah.
Yeah. So what's interesting to me is I don't do my own books either, even though I am a bookkeeper and accountant. But my bookkeeper now is the one who will say to me, hey, I noticed we haven't been using this because she's very integrated into the business. Or my office, my admin person, she's like, hey, we haven't been using this subscription. Like, do we still need it? So the whole team is in tune with this process. And I love that because then it really puts pressure on me to do what you were talking about and make the changes.
Yes. I also want to clarify on this set up one bank account. It's profit. I was actually a bit surprised that you were going to say that. And this is the way my brain works. I'm always like, gosh, I got to set aside the tax money. It's so fascinating to me that that's where I go. So just to clarify, did you say daily we would do that then? We see how much money comes in and we would do it daily?
If you only have one profit account and all your money is coming into one place and all your expenses are going out of that same account, then yeah, every time you get a deposit, you need to make that transfer. So hopefully you're getting money into your business every day, regular. And so yeah, you would make it every day at the beginning.
Okay. And we'd start with 1%.
Yep.
And then how often do we pay ourselves then from that profit account?
So the profit account, you only take a profit distribution every 3 months. So at the end of like a calendar quarter, so March, June, September, and December, you take half of what's in your profit account as a distribution for yourself. So when you're just getting started, if you're not setting up all 5 accounts, I'm assuming that you're still paying yourself from that massive account that has everything. So you're not really changing anything that happens in that account. You're still going to pay yourself from that account. We just want to, like I said, create this habit of establishing a profit account. If you're like ready to jump in with all 5 accounts, jump in with all 5 accounts. Like, don't just stop at one, because that's what I'm saying. Like, that's the very baby step if you're really not ready to do 5 accounts. But so yeah, you're still going to pay yourself from that big account, just like you normally are. And then eventually we'll set up an owner's pay account. And that's when we can start to increase your pay and look at all kinds of fun things and make sure your taxes are covered. Like, you're still going to make sure your taxes are covered out of that big account. But if you're not, like I said, if you're not ready to separate it all yet, putting aside 1% for profit is not going to increase your taxes that much at the beginning. So you can do that without really increasing your tax burden.
And so then we take out half. What happens to that other half?
Good question. Thanks. I meant to go there. It's the most important part, I think. It is your rainy day fund. It's your emergency savings. We can call it a lot of things. I like to call it my own COVID relief plan at this point, right? I used to say before COVID that I didn't know what emergency or natural disaster was going to hit your business, but chances were pretty high somebody was going to experience something. And then we had COVID. And now I'm like, we all have to have an emergency savings account. So we like to see 3 to 6 months. Honestly, after COVID, I don't know that there's a magic number. Like, just put as much money in there as you can and just continue to add to it. So every 3 months, we take half of it as a profit distribution and we leave half in our emergency savings account for whatever's going to happen. I hope there's not another global pandemic, but natural disasters didn't stop even during the pandemic either, right? So something is still bound to happen, unfortunately.
Yeah. Oh, that's so good. I'm so glad that you clarified that. Hey, Connected Yoga teachers, I have a quick note to share with you because we have had a lot of questions come in lately about memberships and how to create one. When you start to have a loyal group of students who show up for you week after week, creating a membership is a great way to transition to reliable income that you can count on. Think of how Netflix works. You pay a monthly membership, you have access to all the movies that you want and even a lot of things that you don't want to watch for as long as you're a member. Imagine creating something like that for your yoga students. If you want to use this model to share yoga, make sure to check out OfferingTree. I just wrapped up a 6-month group program. I used OfferingTree to register everyone, take payments. I love how the time zones are in there. I didn't have to think about time zones. OfferingTree did all of that for me, as well as automatic Zoom links. Oh my gosh, this saved me so much time and energy. I was able to choose what my members had access to. You can put videos in there, PDFs, audio files, text, whatever things you want your members to have access to. And you can choose how long they have access to all of that. OfferingTree does your registrations, it takes payments, they send out automatic emails, and as I said, Zoom links go out like magic. And as I was putting all of the details in there for my offering, this group program I was doing, I was so impressed by how OfferingTree reminded me of things along the way, like, do I want everyone to sign a waiver form, or do I want to set up extra reminder emails? So if you've been looking for an easier way to run the online part of your yoga business, make sure to check out OfferingTree. It's an easy, all-in-one tool where you can host your website if you need to, or you can use this with your existing website. You can schedule classes, private lessons, and like I said, this works so well for memberships. And I have a special discount code for you. head over to offeringtree.com/Shannon. That'll get you 15% off 1 year of OfferingTree or 50% off for the first 3 months. That's offeringtree.com/Shannon for a special discount. Now let's get back to our chat with Shannon Simmons so that we can figure out how to make profit and get paid. Okay, so I love that there's this baby step and it builds that muscle of us looking at, because the other thing that's happening in that day, at the end of the day, whatever time of day we decide to move this money over, is that we're taking a look at our finances. And I feel like sometimes yoga teachers, don't even have a separate business bank account. That's number one. Like, make sure you do that. And secondly, and I don't want to just say yoga teachers, a lot of entrepreneurs aren't looking at the finances. Do you have any other tips around that?
Yeah, you're exactly right. This is not specific to yoga teachers. All of this applies to all business owners. So before I was working with yoga teachers, I was working with just pretty much any business owner, and they all have these same issues. So don't think you're the only ones. But you're absolutely right, Shannon. Like most entrepreneurs, even myself, you guys, we don't have time, right? We're busy doing all the other things. We're busy doing what we love, helping people, right? And so it's easy to put finances aside. But what we pay attention to is what changes in our business. So if we want the financial situation to change in any way, like if it's paying yourself more, being more profitable, being able to have team members, if you want anything to change regarding your finances, you have to pay attention to them. And so I absolutely love actually what you said. We call it Finance Friday. That's when we do it. We have clients who do Money Mondays. There's just a lot of different ways that you can do it. I actually check my bank accounts. I literally log in on my phone once a day, every day at lunch. It's just one of those things, like while I'm waiting on lunch to heat up or whatever, I log in and I just look at my balances. I don't do anything else. I just look at my balances. But it's like some days, most days now, it's exhilarating to see the income building up. And I'm like, oh, you start to learn the patterns. So I'm at the point now where Profit First is implemented and I do my allocations twice a month, like you're supposed to in the book. And I know what I always used to have on the 10th of the month. And now I know what I actually have on the 10th of the month. And I'm like, oh, like business is good. I have more money now than I did a year ago. It's just fun. And then once a week, I just go through the last week's worth of expenses in my operating expense and make sure that nobody charged me twice, or that, there's not some fraudulent charge on there that I wasn't aware of, that I understand why everything's there. I also go through my income account, like, were there any refunds given that shouldn't have been given? Those are the two accounts that change every week. But you start to learn like where they're going to be at during the month. And so, like, honestly, if my income account ever really dipped, besides when I did my allocations, I would know that there's a problem and I'd be taking care of it that day, not waiting until my daily day. But you have to pay attention to them if you want to change it, any part of it.
This is so true. It does not help to be like the ostrich in the sand. Even like you said, we both have someone who does our bookkeeping. And I think even more so, we need to be paying attention, because otherwise you could just be like, oh, I'll leave that to you. And then at the end of the year, how about you tell me how much I owe in my taxes? That could be really scary.
Yeah, that's exactly what we see. People wait until their taxes are done to figure out if they made a profit or not. And that's not what we want to have in our business. We don't wait until once a year to do anything else in our business. Can you imagine if you waited once a year to reach out to a client who hasn't been coming for a week or a month or whatever? They're just no longer a client anymore, right? Like, what the result is. So the finances are no different, and they're not going to change if you don't pay attention to them. And it doesn't have to be a lot of time, like literally 1 minute a day, 10 minutes a week, a couple hours a month, right? It's not that time consuming.
So true. Okay. Well, my Finance Friday, I might figure out how I can do this daily. I'm thinking of so many things. I'm wondering if anyone
just checking your bank balances though, nothing else.
Right. Like not doing all of the other finance stuff, just looking at it. Okay. I'm wondering if our yoga teachers who are listening are thinking, okay, that's going to be the action step I can take in my business. I'd love to hear that in the comments. And then again, any questions you have, we're here to answer those. Uh, what are some of the, I don't want to say mistakes because we are all learning in this, but what are some of the roadblocks that come up for people, entrepreneurs who are like you specialize with people, yoga teachers and fitness professionals? What are some of their big roadblocks?
Yeah. So two that I can think of. First of all, people in the book, they give what they call target allocation percentages. And those are the percentages that you would be allocating into each of the 5 accounts if you are, I like to call them an elite business owner. So you are like top of the top. You've been implementing profit first for like years in your business. We see people get a hold of the book, get a hold of that graph, like I can give you that graph, right? And jump in at those levels. And then they come back to us like, I don't know, 2 weeks, maybe 2 months later, and they're like, doesn't work. It killed my business. I couldn't pay my rent. Okay, that's why I said 1% goes into the profit account. You have to start small. So the mistake is to jump in at the target allocation percentages and think that you're going to be able to make it work. It hardly ever does, because you already have a business established. You already have habits regarding income and expenses established, and it takes time to undo those habits and make it actually work for you. So that's the first big roadblock. And then the second one people will say is, I'm not profitable. How can I implement this if I'm not profitable? Most people aren't profitable before they implement profit first. That's the dirty little secret. They're just not. And again, that's why we start really, really small with 1%. And we give you time to figure out how you can become profitable by analyzing your expenses and increasing your rates. But it takes time to do those things. Like, you can't just do it tomorrow. So start small and don't start at targets. Those are the 2 big ones.
Okay. I love these, like, well, first of all, I love that you called out, like, there's many entrepreneurs that are not profitable. You don't have to be like generating a ton of income, and we'll start at that 1%. Now, the 2 figures that stick in my mind is start at 1% for profit first and around 20% for taxes. Are there other percentages where you start people, or?
Honestly, it really depends on your tax situation. So I think 20%, like 20% would be incredibly high for my tax rate. And honestly, that's why I say get some professional help to figure out where you need to be starting your tax percentage, especially because it really is different depending on so many different factors that there's no way we could go into any of them really here. The target for owner's pay for a business that's doing less than $250,000 a year in revenue is 50%. And most people will hear that and they'll be like, oh my God, there's no way I could pay myself 50% of my revenue. You're right. You can't right now. You absolutely probably cannot right now. So there's not really a starting point. I like to figure out, what is that? One of 2 places. What is that minimum viable wage? Let's at least get you that much. Or what have you been paying yourself? Most of the time, what I found with business owners is they don't pay themselves consistently. They pay themselves when they have money. So especially in the yoga world, Black Friday, we do these paid in full specials, and we give people 12 months of membership if they pay us this big chunk of money. And so we get a big chunk of money and we live life like to the fullest in December. And then, like, I don't know, March or September comes and we're like, why can't I pay myself? Well, because you paid yourself so much in December because you had money. So one of the things I really like to do is look at how much have you paid yourself over the last 12 months, and let's even that out and pay yourself as if you're on a salary from your business. That way, like, you can start to plan your expenses and your income personally from that business revenue. So we figure out how much you paid yourself as a percentage of your total revenue. Say it's 10%. okay, let's start allocating 10% into that owner's pay account. And hopefully in 3 months, we can bump it up a percentage or two. That's the other thing you do when you take that profit distribution. You evaluate your allocation percentages and hopefully increase profit, tax, and owner's pay. But we, again, just start with where you're at, and then we can increase and improve from there. But first, let's figure out where you're at and start there.
Right. Okay. In the last year and a half, I started paying myself a regular amount. And it's so helpful for me just to see a spreadsheet of like, because I sometimes think like, but I don't need to pay myself that much. Maybe I can, put that down on my, like a bonus payment on my mortgage. This comes from only getting one paycheck a year and being super frugal. But I love this idea of like, we're working towards 50%. I know I'm not at that at all. Do you have any tips for like how we get there, or what helps us? Or is it just exactly that, just like having that goal?
It really is having that goal. And like I said, every 3 months, pushing yourself just a little bit more to get towards that. Like literally, I mean, once you get so far, it's like it's 1% at a time. Like usually in the first few months of implementing Profit First, we tell people we can find about 10% of your expenses to cut. So that's like a big bump to all of those profit, tax, or owner's pay. We can start allocating 10% more to those accounts. After that, it starts to get a little bit, it's like fitness. You can make some really big changes at first, and then it gets harder to make changes the longer you go. It's just the way it works. I mean, we're more in the habit, and so it's easier to maintain. So it takes a little bit more creativity at that point. But again, like just constantly reevaluating expenses, remembering like every year you should increase your rates. So what percentage is that? And not just increasing your rates, but at the same time changing your allocation percentages so that it doesn't get sucked up by operating expenses. It actually gets to go to your owner's pay instead of rent or whatever it might be. So every 3 months, evaluating and getting closer to those targets. And you guys, some people figure out that minimum viable wage is only 30% of $250,000, and they're totally happy there. Okay, like you don't have to push it to 50% as long as it's working for you and it's consistent. I will say, like, I do start to talk to people at that point too about like, what are your retirement plans? Are you going to work in this business forever? But those are big conversations.
Yeah, I was just thinking like, I wonder how many yoga teachers watching now have a retirement plan. Not many that I talk to have one. So
it's not part of that minimum viable income that we were even talking about. So a lot of times we go back to that minimum viable, and then we're like, okay, we've got that covered. But what's better than minimum viable? Like, what would your lifestyle be if it could be?
yeah. One of our people who's here live said, yes, action. And I would say, like, if you can find one nugget of this and implement it, like I was telling Shannon, I haven't done the full profit first thing, but I take bits and pieces of it. I'm going to take this baby step of this profit account and start there. I feel like all of the accounts is overwhelming, but that I can do. Or maybe it's, opening a business bank account or looking at your finance every day, just for a quick moment, looking at the balances there. What other action steps do you think that you could take in your business? Paying yourself a regular amount. That's another good one. If people need help with this, Shannon, how can they work with you?
Yeah. So our website is fitforprofit.com. That's the name of the business. And I actually have a getting started guide that I can give you all as well. So it will walk through a lot of what we've already talked about. And it really it's like in paper form, right? Or in digital form so that you can revisit it on a regular basis. It also goes through some of the mindsets that are already in that you're operating with right now, and you probably don't realize it. So that's at fitforprofit.com/connected yoga. And you can download that, and that has a link in it to book a call with one of us. So we have coaches that's what they do. They look at people's financial data, bookkeeping, financial statements, and find expenses, help people find those expenses. Because, like I said, a lot of times we are emotionally attached to our own expenses in our business. And we feel like it's going to be a huge burden to change whatever that is. And when you're accountable to somebody else, when you have to get on a phone call with somebody else in 2 weeks and say, I didn't get it done because, you usually get it done. And so that's a lot of times what our coaches do. But just a lot of the things that we've already been talking about today, as far as helping with raising rates and when's the right time and how much do you need in taxes, how much should you be paying yourself, can you be paying yourself? So I don't know why this is, but a lot of times I think it's true of all business owners actually, but I find it especially with yoga teachers. Numbers just freak them out for some reason. And so if that's the case, you don't have to do the numbers. You can hire somebody to give you the numbers. And that's really what we do for people. We do a big in-depth analysis and tell you this is how much you should be allocating to each of those accounts. So.
That's amazing. Yeah, I think you're right about having that accountability is so helpful.
A lot of our clients, you guys, you all have the hearts to help people. I get it. We all do, I think, right? It's why we are in the same connected circles with each other right now. But one of our clients he has an advanced account. We haven't even talked about that, but there are ways to build on to profit first after you get really good at the 5 accounts. So he has an advanced account that is his give back account. And he gives scholarships to people to come in and do yoga in his yoga studio, but only from his give back account. And so it's very systematized, very methodical. It's not like he's not killing his business to do it. And yet he is doing exactly what he wants to do. And the more profitable, the more revenue he brings in, the more he has in that account, because it's always a percentage of his revenue. So you can do really good things. It's not all self-serving, is really the whole point of that. Profit has this bad connotation because there are people in the world who get press for doing bad things with profit. But most people don't do bad things with profit, and yoga teachers are not going to do bad things with profit.
It's so true. And I love that you shared this story. And I see that all the time. Yoga teachers who are doing well in their business are able to give back, whether that's through time or scholarships or giving to causes that are doing really amazing work. That's amazing. Thank you so much for this today. I'm inspired to look at my finances a little bit more, and just thank you for sharing all of this with us.
It's fun. I love it. And I hope it was helpful.
It was very helpful. Thank you so much. Wow. Thank you so much, Shannon, for all that you shared in today's episode. It has given me a lot to think about, and this is one of those episodes that I want to come back to for sure. I am so curious to hear from our listeners. What is your key takeaway, or what is your action step that you are going to be taking? You can tag me in our Connected Yoga Teacher Facebook group. If you're not already a member, you can find the join button right on our website, theconnectedyogateacher.com. Or you can, if you're in Facebook, you can search the Connected Yoga Teacher group. You can also leave us a comment in the show notes. That's at theconnectedyogateacher.com/280. All of the links are there. So Shannon mentioned some links. We're going to link to Amanda McKinney's podcast about this if you want to hear a little bit more about Profit First. And also, we have clickable timestamps. So if there was one part in this episode where you thought, oh, I wanted to go back and listen to that part again, you can click right on the timestamp in the show notes and it'll take you right back to that spot. I think my key takeaway in all of this, and listening to this interview twice, once in real time and the second time listening again, is that we can always take a step towards working on our finances in some other way in our business. There's always one more little thing, or it might feel like a big thing, so break them up into small things. I just really love this. I've been looking at the profit first method for a long time, and I have to be honest, I have not implemented all of the 5 accounts in that bonus 6th one. Actually, today's interview was the first time I ever heard about this bonus 6th one. So those 5 accounts are, you have your income come into one account. Please, 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 if you have not opened up a business account, please do that. Please separate your personal from your business. It's just going to make all the difference in your mindset, in your income, in your profit. Please do that. So if you haven't done that baby step, or sometimes it's a big step, depending on all the things you need to do to open up a bank account, go and do that for sure. So you want your income account. And then the number 2 is that profit account. And I love how Shannon encouraged us to start with 1% on this account. So if you've never done this before, start today. Every time you make money in your business, move 1% of that over. Number 3 is that owner's pay. What are you paying yourself? I remember what it felt like before I had a regular paycheck as a business owner, and you just think, well, I just need to keep working away here, keep paying all the expenses for my business. And it's really important that you are getting paid for that work, and you will figure it out. I promise you will figure it out once you've set it up. Also, taxes. That's the 4th account. Taxes are for everyone. Not fun for sure, but what has helped me, one key takeaway that's helped me with taxes is when I make more money, I pay more into tax. Here in Canada, we're super lucky that we have access to all kinds of things. I remind myself I have free healthcare. I remind myself of what my taxes are going towards. Not always helpful, but sometimes that's helpful. Number 5 is operating expenses. So these are the ones that we're really focused on these ones, What is our yoga insurance? What dues are we paying? Maybe some software expenses. Our Zoom is in there. Maybe we're renting a yoga studio. Those are all of your operating expenses. And number 6, thank you so much for this today, Shannon, was that bonus. How can we give back? Now, I want to share a story that I did with my kids. As I was listening back to this episode, it reminded me of this. We had 3 envelopes for each one of the kids here. One was for saving, one was for spending, and one was for donating. And I gave the kids allowance once a month. This happened before they had their own jobs. So they got money not tied to things. So in our house, it was like, you help out because you live in this house. And then here's some money because you're going to learn how to use money. And so 1/3 would go in saving, 1/3 in spending, and 1/3 in donating. So the save was for something, that they wanted to save up for. And it's interesting when you tell them, okay, this is something, you're still saving this for something that you want to purchase down the road, but it's going to take more time. The spending, that was the money, throw it in your wallet right away and the next time we're in town, you can spend it however you want. And then the donate one was really my favorite, to watch the kids just light up in thinking, okay, I'm going to take this money and donate. Sometimes there was oh, I don't want to donate this. I want to move that over to my save. If I move that over to my save, I'd be able to buy the bike I want or buy this thing that I've been saving for. But the moment they had that experience of donating and, really choosing where to donate their money as well. Some of them wanted to donate to a wildlife fund, while some of them wanted to donate to a child in need. Or sometimes it was okay, the neighborhood kid is coming around and selling chocolate bars for this really good cause. Wow, I get to spend my donate money and eat a chocolate bar. Those are the bonus days. I wanted to share that because I think that yoga teachers have that desire to give back. And this is one thing that might motivate you if you think, okay, I've got my finances in order in every way. I'm paying myself, I'm making a profit, I'm paying my taxes, I'm paying all of my expenses. Maybe you're at that stage of adding in that, how can I build in this bonus, this give back account, and have a 6th account? And I think the other key takeaway for me, connected yoga teachers, is that I love how Shannon said, you can implement this before you are quote unquote profitable. And this method will enable you to become profitable. So after listening today, there is zero reason why we all can't be earning a profit in our business, even if it's just 1%, even if you're saving and holding it in there in case you're like, gosh, something might happen. I really just appreciate how Shannon put this all together for us. So tell me your key takeaways. Tell me your action step that you're going to take. Let's talk more about money. Let's do that either in the Facebook group. Send me a voicemail if you want to. I love getting voicemails. If you head on over to theconnectedyogateacher.com, you'll see the voicemail button there. I love to hear from podcast listeners. Also, if you want to hang out in person, we can do that online. We have 3 calls coming up in pelvic health professionals that I want to tell you about. And remember how I said you can actually get a month free of pelvic health professionals. Go back and listen to last week's episode. And there's a coupon code in there. So there's really, you don't even have to pay to do this when you choose, like, which month do I want to show up for? And hang out and ask questions to an amazing pelvic health expert. So in July, this month, Leslie Howard is going to come in and talk with us about energetics of the pelvis. In August, we're going to talk about desire and libido with Dr. Rose Schlaff. And then in September, Jill Mueller, who's a pelvic health PT, is going to come in and talk to us about pelvic health and endometriosis. Oh, and I said it last week on the podcast, I need to tell you all, I'm going to teach a 6-week Yoga for Pelvic Health series, and it is going to be included in the membership. I don't have the dates ready yet, but you will hear about it first thing as a pelvic health professional member. So for everyone else, it's going to cost $120, but for members, it's included. So yeah, make sure to get your free month of access to pelvic health professionals. Go back to episode 279. So that's theconnectedyogateacher.com/279 and grab that coupon code and join us. Also, because you're here right till the end, next week, we are going to get into a series of podcasts where we get into all kinds of topics that will help you to build confidence and skills as a yoga teacher. I cannot wait for this. You know what it's like when you meet up with a yoga teacher friend and you just geek out on teaching yoga tips and tricks and ideas and mistakes and all of the good juicy stuff that wouldn't make sense to anyone else who doesn't teach yoga? That is what these episodes are focused on. And they are put here in the summer if you're listening live, so that you can be ready for fall. So September is when people usually want to get back to class, get back to routine, sign up for your thing. And so I would love it if you took what you learned today, take a small step forward, an action step, something to do with your finances, get that all organized before next Monday when the podcast comes out. Like maybe that small action step is checking your bank balance every day, or maybe you open up a business bank account if you haven't done that already, or maybe you open your profit account and you move 1% over and you're like, woohoo, I just made some profit. And then next week and all the way into August, we're going to look at how to sharpen your teaching skills. We can always do something more to learn as yoga teachers. And these are some really amazing people and guests that we have coming on. I can't wait till you meet them, talking to us about how we can really improve as a yoga teacher. And we've earned this, connected yoga teachers. We've done a lot of digging in. Remember back in June where we were digging into all things like cultural appropriation and land acknowledgements, and let's really examine a lot of deep, heavy topics. I feel like when we look at teaching skills, it's a little bit easier. It's a little bit lighter. You can listen away and think, oh, light bulb moment. Wow, I've never thought of that. I'm going to add that into my teaching. So I can't wait. I feel like it'll be a bit more like a summer holiday for us to hang out together, to learn together. I also want to give a huge shout out of thank you to our team over here, Suzanne Crunch and Sinead, for making this podcast possible. And also to you, dear listener, because you are here all the way to the end of today's podcast episode. You signed up to listen to money talk, which is not always comfortable, and talking about how to make profit and build this sustainable business. And I'm just really grateful that you did that you invested this time for you, and that you also got to hang out. It means a lot to me. So as I close, I would love to know, what will you be doing this week to stay connected to yourself, your yoga practice, and to your community so that you can share the yoga that lights you up?